What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Seema. How you doing today, Seema?
Great.
Excellent, excellent. So I didn't make an attempt at your last name because I haven't even heard you pronounce it.
Yes,
How do I not totally embarrass myself? Is it Maheshwari? Is that
yes, it is
that's
exactly like that. Yeah,
yes, linguistics for the
yeah.
win. But that's not my only win today. My other big win today is that my favorite audience member is here today. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate investors. Why do I do that? Well, part of it is because we have to. It's the law. But the bigger part is you need to find the people in your industry, figure out if there's overlap. But this show here is to help you personally communicate more effectively on the topic of real estate. And how am I going to do that? Well, I go through the core competencies that are inside a commercial deal just to make sure that you know the pieces of the puzzle. But the point is, I'm finding out my guests' core competencies and what exactly they're looking to do in this industry. But before we get too excited on that, Seema, can you please introduce yourself a little bit to the audience?
Hi, my name is Seema Maheshwari. I'm a Canadian living in the US. And only in the last 2 years, I started to do some investing in not only in real estate, but in all kinds of different things to diversify our family's portfolio.
Beautiful, beautiful. So you said that you've been in this for a couple years, getting into learning. And one of the things that I like to do first is I go through the motivation piece first, because I found that there are five distinct motivators that commercial investors have, and this will tell me why exactly somebody is involved. And if they're just getting started, they'll know why they're doing it, even if they haven't figured out what contribution they're going to have. So let's go through those. The first one, which I believe is one of your bigger ones, is preserving your purchasing power. And what that means is if you already have cash flow coming from your assets, and that is how you make ends meet, then the biggest concern is to stave off inflation. So sometimes you need to make some additional acquisitions just to make sure that inflation isn't going to ruin the party. But that is not my primary motivation. My primary motivation is trading time directly for wealth as opposed to wages or salary. Me personally, I'm in tech. I had a CRM company, and the problem with making money in the form of wages or salary is you're giving half of it away to tax, which is a disaster. So it hits me as like, well, how can I pivot and make it so that I'm accumulating that wealth or equity instead of doing it the slower way? So that's what I'm up to. But most people who I talk to, they're more eager to fast track their retirement, or more accurately, take more control over their time. So maybe that means they want to work fewer months per year. Maybe it means fewer weeks per month. Maybe it's fewer hours per week. But regardless, the idea is to tone down, to gear shift down into something that's a little bit more relaxing, so you're not hustling all day, every day. But that's different compared to the next two. For example, the first one here I have is people who are so ambitious, they want to buy their entire hometown. What they're really up to is they're looking for that generational wealth, and they want to make sure that their great grandchildren never have to hold a day job. So if they are that ambitious, then they're going to be hustling into their 90s, and that's what they're up to and why they're making more acquisitions. But the last group, they're also going to continue hustling for a long time because they also have a motivation that's independent from just dollar cents or just a particular mark. But they realize if you're going to have a real impact on society, and maybe it's not just a sector of society. Maybe it's animals, maybe it's the environment, maybe you want to send people to Mars. Regardless of what these big aspirations are, the financial side has to be under control before you can make that really big impact. So that's another reason why some people end up getting into commercial real estate and making more acquisitions. So Seema, as far as those 5 different motivations, what combination of those describes you best? What sounds most like you?
Yeah, I was trying to remember them as you went through them. This is like a quiz. So number 1 doesn't apply. What was number 1 again?
Yeah, that was
living on.
preservation of purchasing power, and so that's
Okay.
basically protection of your nest egg is the reason why you're making more acquisitions. But time
So
time
I
for
don't,
the go ahead.
yeah, because I'm still don't have a big portfolio because everybody in my family has jobs, even if they're not W-2, but still they're high earners and they've been paying a lot of taxes. So I am acquiring stuff, so I'm not in the preservation of capital yet.
Mhm.
Number 2, I think applied. Tell me number 2 again.
Yeah, that's focusing on accumulating equity, aka
Yes,
wealth. Yeah, yeah,
right,
right, exactly.
right.
Instead of
So
weight.
and yes, and I'm doing it. I don't have grandchildren yet, but so I am doing it, which I think kind of goes hand in hand with building a portfolio for my kids.
Mhm, mhm.
So number 2 applies, and number 3 was
Fast tracking retirement.
no,
Right.
because I have not worked, so that doesn't apply. And
Right.
my husband will always work because he doesn't know what else to do, so that doesn't apply. And number 4 was that
Just
the
plain
generational wealth
ambitious. Yeah, just plain
or
ambitious. Meaning, yeah. So
yeah,
there's a.
create generational wealth? Yes.
Mhm, mhm.
And of course number 5, and that's how number 5 got me going, because I got very irritated that I was never taught, my family was never taught how to invest, and as high earners we were paying a lot of taxes, so my daughter's generation really don't know how to take small amounts of money and invest it and build their retirement portfolios, as well as have some cash flow and pay
Mhm,
off their debts. So that
mhm.
is very important too. And I think
Excellent.
that is important to people with a conscience, because it is good to give back.
Mhm, mhm. Yeah, exactly. Yeah, if you know the plight that some people are in, then I don't think you can just sit idly by. But let's talk about risk for a second. This is the weird question that I've thrown in, which is I want to ask you if there's an asset class that it's popular, but it's definitely not for you, and that's because you find it's too risky. Do any come to mind, really?
Yes, and it did, and cryptocurrency did, because when it was really high, I did not have money at that point, and because if I'd had it, I would have bought it and then not sold it soon enough.
Mhm.
And all I did was put $200 in Dogecoin before Elon Musk was going to come on Saturday Night Live, thinking he will make it go high, but it crashed.
Mhm.
But luckily that was just $200. But that is one that definitely is risky, but people, it has made billionaires. So if at some point I can go into it with a lot of advice,
Mhm.
I think that would be the most amazing but riskiest thing I would have done in my life.
Yeah, I love it. Yeah, it's with crypto though. The one thing that bothers me is just like actual physical gold. You're not getting any cash flow from it, so it really is an appreciation move. Buy low and sell high. But real estate has more tricks up its sleeve than that. So let's go through the different roles. And if you want to be able to communicate on the subject of commercial real estate a whole lot more effectively, this is what you should probably do. You can go to dandoesdeals.com and you can download and print out your own Dan Does Deals commercial roll die. And then that way you can practice communicating the different roles and how a deal actually works. So let's start off with the repositioner. The repositioner is an acquisitions person. They're finding new properties to add to the portfolios. They're looking at a lot of properties. They're doing a bunch of paperwork. And what are they doing with all that paperwork? Well, the first thing they're going to do, there's a fancy word for it. It's called underwriting. And that means they're doing the math. Okay. First of all, if they're buying from the sellers, then they have to find out, is the property actually even making as much as the seller says it is? And on top of that, they're called repositioners because they're figuring out, how can we change this property so that it makes more than it is right now? And there are three main tools in their tool belt. The first one is pretty simple. It's more advantageous lending from their financiers, but we'll get to that a little bit later. The repositioner probably, though, is going to first depend on more efficient operations to stop more of those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns and taking out the trash. There's also a marketing piece, which is one of my fortes. And the nice thing about marketing, having a strong marketing team or part of your GP team, is that it'll keep the vacancy rate low. But there are other situations where, to do renovations, whatnot, you might need to raise some more money. So that's another thing that's handy for my skill set. But even if you are cutting those costs with operations, that's probably not going to be enough right now because real estate's so hot. So the repositioner is also probably going to need a contractor team to do what they call a value add or renovations. So they make the place nicer. And the idea is that way people will pay more to live in those apartment units. So, but the one issue that the repositioner might run into with the contractor team is that they live too far away, or maybe they're like me and they're from the internet. And so as a result, I always need a local. You need the boots on the ground. You need somebody who can be there in an hour or two. And that's not going to be me, but they're going to have to keep an eye on the operations, make sure that they're actually doing their jobs, make sure that the contractors are staying on schedule and all that kind of stuff. And most tenants, if they look at these four sides, they're like, oh, those are the owners. But of course, the financiers are actually involved. It might be fund managers as well as banks and whatnot. But if you're looking at a property that costs tens of millions of dollars and you're going to need a loan, you're going to have to turn around to these guys and say, hey, got tens of millions of dollars by any chance so we can buy this place? And they're going to say, oh, okay, so this is the team, this is the deal, all that kind of stuff. And then they might blindside you by saying, but who's your KP? Who's your sponsor? And what's that all about? Well, some coaching programs, they skip over that part, but to be eligible for a loan, you have to have somebody in the fold who already owns a similar asset. So even if you're Elon Musk, if you want to buy a 350 unit apartment complex or something like that, if you want to get a loan, you still have to have somebody in the fold who already owns a similar asset. You also need a certain amount of liquidity, and then you also have to have a balance sheet among the GP team of at least the amount of the loan. But if you have all of those pieces, you've got yourself a commercial real estate deal. So, Seema, I believe that you're taking up LP positions, which would make you a financier. But I don't know if you'd also be interested in being a local to some degree or something like that. But of those different core competencies, what jumps up to you, or would you purely be on the financier side, do you anticipate?
Yeah, I would be on the financial side because boots on the ground means, if it means holding a hammer, that won't work.
Yeah. It's the oversight and accountability part. So it's just somebody who can show up and also look and say, hey, wait a second, why hasn't anybody fixed that, hole in the wall? Or,
Right.
oh, it looks like the roof is not being or needs to be replaced or something like that. So financier purely?
Yeah, I think that is my only ability, because some of the other ones obviously require you to have knowledge of certain things, and obviously I'm not a bank, so yeah, so that's out. Yeah.
All right, excellent. So then my next question, then, it has to do with the what we call the buy box. And just so you know, when commercial real estate investors talk to each other and they say, hey, what's your ideal property? What are you really looking for? What's your buy box? They're really asking for three, I like to say 3.5 things. The first one is geography. Where is it? So what states? what counties, what neighborhood. That's very, very important. They're going to have to know that. The second thing, we're talking about multifamily here, so it's unit counts. Unit counts are also there in self-storage, in mobile home parks, in retail, but industrial they use square footage, and same with warehousing. So you're going to need to have the unit count to have an idea how big the deal is. But the third one is called class, and I say 3.5 because they use the same word for two different things, which annoys me to no end. But the first meaning of class, it's the condition of the building. So how old is it? How beat up is it? Is it new and immaculate? Okay, that's the first version. The second version of the word class, it has to do with the neighborhood that the property's in. So what's the crime rate like? What are the school districts like? Okay, so those are both called class, and just like in grade school, they give it the same kind of ranking. So maybe it's like C- or B+ or A or something like that. So that is what people are asking. So as far as properties, using the ways that I just describe it, what sounds most appealing for you, Seema?
Well, from what I have heard from various people on various webinars and all, the lower you go in the ABCD, the more risk you take. But then the higher you go, the lower your cap rate.
Mm-hmm,
So I
mm-hmm,
think if you're doing value add, I would think taking something from a B to a B+,
mm-hmm, mm-hmm.
from what I understand, would be good. You don't want an A because then again, your cash flow may be low and your cap rate will be low. And if you're doing a D, that means you're in a crime-ridden area. So,
Exactly,
or you could,
exactly.
yeah,
Okay,
from
and
my
then and what about states that you're
well,
interested in?
yes, states. Unfortunately, the states I would like versus the states where one should really invest are total opposites.
Mm-hmm,
So, from my understanding, is it one should invest in the South.
mm-hmm,
So, and since I live in Florida, of course, I'm looking at what's happening here, and everybody's gobbling up multifamily apartment buildings.
mm-hmm,
Because even if the market was to soften, it won't soften much in areas where the baby boomers are still retiring.
mm-hmm.
So, Florida, Texas, Arizona, maybe even Georgia, those are the states that seem to work best
Mm-hmm.
for people investing in real estate.
Mm-hmm. Great. And then as far as like unit counts, do you prefer the medium size properties like like 100, or do you like something on the smaller side? Like what the strategies regarding that to make the great decisions?
No, but I know that obviously if I could buy something from outright for myself, it would have to be, a much smaller
Mm-hmm.
apartment building. Yet I've done one syndication in a new build that'll be about 300 doors.
Mm-hmm.
So
Mm-hmm.
obviously it all depends on how much is the financing, what what the syndicators are looking for.
Mhm, mhm. Beautiful, beautiful. Yeah, and as far as the accepted wisdom goes, the main thing is exposure. It's if you have fewer tenants and you lose one, then a much bigger portion of your revenue is going to disappear. So you can absorb more losses in 100 or 150 or 300 units, and you also have other people who are invested to basically cushion the blow. That's basically the accepted wisdom about that. So my next question has to do with who you're best suited to help. And me personally, like I love commercial real estate. People are so helpful, and it's because it's multifaceted. Nobody's going to be all of these roles for any real amount of time, if at all. And me personally, I'm always on the lookout for more sponsors and KPs. And the reason for that is because of my marketing and digital CRM background. And so I can help people who already have some sort of foundation much more than somebody who's just getting started. But it sounds to me like you'd be best off meeting the operations people or the KP sponsors who are probably the main syndicators, just because you're going to be sniffing them out to figure out where to deploy your capital. Does that sound about right as far as who you think you want to meet right now?
Yeah.
Okay.
And those are the ones that I have met on Zoom meetings and all. Yeah.
Okay, excellent, excellent. So then, as far as how to reach you, we met through Peggy Beauregard's meetup that's on Tuesdays at 5 p.m. Eastern. The Nest Egg Builder, was it called?
Yes.
Yeah, you're right. That's the name of that show. So we met through there, and I found those through some friends through LinkedIn and some other meetups. So what's the best way to reach out to you? I'm always on LinkedIn, and I know we've spoken on there as well.
Yeah, I have recently started paying attention to LinkedIn, and that is the best way to contact me.
Okay, easy peasy then. So the only thing left is actually not for you, Seema. It's for you in the audience. It's actually a social campaign I've got. It's called Kill the Ugly Red Buttons. And if you look under my left hand, you'll see a big ugly red button, and it needs to be destroyed. It's awful. And the only way to get rid of that awful red button is you just click on it, and then it turns gray. You gotta see the gray one. It's so amazing looking, and it has this magical power, so that's probably why I'm biased. What it does is it means that YouTube starts to pay for these videos instead of me. So that's amazing, right? But jokes aside, what it really means is that my videos might show up on your list of suggestions, but you can go ahead and ignore them. I just appreciate the fact that you spent this time with me. Just like Seema, I really appreciate you joining me today. This has been great getting to know you a bit better.
Thank you.
All right, awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.